Against the backdrop of a rapidly global spread of novel coronavirus, an increased number of cases being detected locally as well, the Reserve Bank of India has joined other central banks in starting to look at this as an emergency response situation. I know that the equity markets in particular would like an emergency interest rate cut. That has not come from the Reserve Bank of India or the MPC, but what they have started to do is start taking targeted emergency measures, if we could put it that way. In the last 24 hours or so, we've seen two announcements for the Reserve Bank of India, and it's important to try and put that in perspective to show what they're exactly trying to do. On Thursday, they said that they will do $2 billion in USD INR, that's dollar rupee, sell-buy swaps via the auction route on the 16th of March. The RBI announced this against the prospect of a dollar shortage emerging in the market. Now, there was no immediate concern, we understand, of a dollar shortage, but there were some foreign banks who were starting to worry about that. This is a phenomenon just not relevant to India, but in many emerging markets where there is a surge of outflows from foreign portfolio investors and corporates rushing to secure their dollar needs, the prospect of a dollar shortage emerging could have come through in India as well. So the RBI, in a preemptive action, has said that it will step in to supply dollar liquidity to the market. Now, in their release on Thursday, they said that this $2 billion is being offered as a start. If you read between the lines, the RBI is suggesting that it stands ready to act again and offer more dollars via these swaps if it feels the need to do so. The RBI has also, of course, been doing what it does in the spot market, which is a separate thing entirely, where they will curb any volatility. For instance, today, traders do say that they think the PSU banks intervened on behalf of the Reserve Bank of India. But that's a separate thing. This is assuring dollar liquidity in the market in the face of rising outflows and need for dollars from the corporates as well. Now, the RBI is also signaling comfort on the external front. They advanced the release of the current account data for the third quarter, which showed that the current account deficit is at just 0.2% of GDP in Q3 of FY20. That's the best percentage of GDP number since we've seen about 2016. They also, in their release, while announcing the sell-buy swap, said that forex reserves are at 487 billion and are adequate to cover any requirements. In fact, more than adequate. They cover about 12 months of imports at this point in time. Now, on Friday, they stepped in with another announcement, and this one on rupee liquidity. Now, what had happened is that when the RBI announced the sell-buy swaps for USD INR, that's dollar rupee, some market participants were concerned that this would suck out rupee liquidity. Rupee liquidity is not really a problem because there is surplus in the market right now, but the RBI seemed open to those who were worried and have sort of tried to douse those worries as well. So they announced on Friday that they will conduct a 25,000 crore variable rate repo auction. They would not be doing this typically under the new liquidity scenario, but they're offering this money to meet any mismatches that may emerge on local liquidity in the short term. So essentially, the first two measures that have come from the Reserve Bank of India are targeted measures, but they do send out the signal that the RBI is very much in watchful mode now and will continue to react to situations which they see developing or situations which are already starting to hurt the local market.